Welcome back, everyone. Today we are buying stocks in the stock market, or at least showing you how to buy your first stocks. So, to begin, you need to download a brokerage. So, you can start with Robinhood, M1 Finance, Fidelity, Webull, SoFi. Start Engine, that's one that I use for private equities, but that's more for future videos. But right now, we'll just use Robinhood because I would think that's the beginner one that everyone should just kind of start with, not necessarily stay on there forever, but it is a good app to use only because it does have a lot of information on the stock, and the app really feels very intuitive as well. So you know where to click, how to click through it. It's very user friendly. That's what I like about it. So to begin to buy stocks in the stock market, you would want to start thinking of the things you see around you. So, what is one thing that you see that you think might be there for a long time, or any new innovations, any new companies that you're seeing around your neighborhood? So, right now, for example, we're holding a phone, and that phone is made by Apple. So, you open it, you find the ticker. So the ticker for Apple is AAPL, or you can just type in Apple as well, like this. So a Apple, and that will pull up the information for the stock for you. And you can usually this check mark up here. You can add it to lists that you want. So you can create a new list. I'll cancel that, but I have all my lists here of all the stocks I potentially want to own or just have been curious about them. And yeah, you can create as many as you like to: ortho, freelance, retail, digital design, medical, arc innovation, satellites, insurance, flying, pets, 3D, AI, lending. So a lot you can create and add them to that watch list. And so the second thing is the chart. This chart is a very basic line chart, and it's usually dependent on where you set it to. So you can also set it to a candlestick pattern. This is a little more complex because with these candlesticks, it tells a story. So if it's red, that means it opened up at, let's see, at 262. It actually went as high as 262 and 70 cents, but it turned red because it closed at 256. So a few points lower, which is about like a 2% change. But then when it's green like this, that means it opened at at a 256, and it went as high as 259, but it did end up closing at 259. So it does tell a story, and it depends on the time frame. So this one is the 1 year frame, 5 year, then the max. On Robinhood, this is a new feature that they added. It's called the digest, or it's powered by AI. It just basically finds information, anything that's current or anything that's making a stock move drastically, and it just kind of covers it. So potential India fine, analyst ratings update, retail trading trends, and the broader outlook. So the macroeconomics. It's a quick snippet of what happens, and this section right here, that's where it tells you your position, the value, the percent of your portfolio, and your average cost. Margin requirements, definitely stay away from that. Do not touch it because you will start losing money that you don't even have. And then next thing you know, you're owing Robinhood money. So definitely stay away from that. About Apple, so it goes into more into the fundamentals of the stock, about what they do and how it's international. The CEO is Tim Cook, founded in 1976. And so he has all these values for you to look at. Another one that's really important to look at is this PE ratio. It has a PE of 34. The S&P 500, which is the 500 largest companies right now, it sits around like 20 to 30, and PE right now for Apple is 34. So that is actually for Apple, that's slower than what I'm used to seeing it at. So it might be for a reason. So it's definitely one number to get to know. and they have some news articles for you to read of what's changing it. I would say don't get dragged into it because a headline here and there will be negative or very positive, and that can ultimately change how you feel about the stock. I would say look at the numbers, look at the revenue, what their forecasts are for that stock, and that's what you focus on. Don't focus on these little articles coming out. Oh, Apple is getting sued here and there, or Apple is making great, huge moves into quantum AI, as an example, just random example, but you will see those articles and it will cause the stock to move either down or up very drastically. I will say don't get sucked in on it. Find your thesis on why you want to buy that stock. Make sure you write it down if you need to, or keep a note of why you're buying that stock, and hold it for a while, and that's where you actually make a big chunk of your money, is by actually buying it and holding it. And because if you try to trade it, you will miss out on so many big gains. So next thing, trading trends. This is also a new feature. It shows you how Robinhood users are buying or selling. Hedge funds, are they buying or selling? Insiders, informative sell, for example, for this one, 3.8 thousand shares of Apple in the last 3 months. And of course they have to put in their disclaimers. And yeah, that's actually a good trigger for me as well. Like, definitely do your own research on each stock that you buy, but once you read everything about it, their next earnings report is on January 29th. So I do recommend that you listen to the earnings report. It's usually on the investor relations page of Apple or whatever company you're looking up. And here on Robinhood as well, there usually is a pop-up that comes here under this earnings, and you can click on that and that'll take you to the website. And just some history. So once you review that, there are other sources. For example, the investor relations page, you just go there and research more about that stock. But to continue with buying shares, you click buy, and how many shares would you like to buy? So we can start with 1 share. Estimated cost is 255, so that is dependent on how much it is right now. I would say don't focus too much on the price. Just because a stock is 255 does not mean it can't go up higher. And just because it's $1 does not mean it has the most potential. Because usually the reason stocks are beat up, it's because they're struggling. So there's bias in one direction. So if you buy it, there's a probability that it will continue going down. One thing to definitely keep an eye on, though, is definitely the market cap. So, for example, Apple right now is worth $3.76 trillion. So that is a lot. But you hit buy, you specify either you want to buy by the number of shares or by dollars. So if you don't have money for 1 share, you can just buy fractional shares. So $1 and ready to go. Swipe up to continue. Um, or you can just do 100, however much you can do. You can buy fractional shares. I hope that explains it a little bit. I know this video is pretty quick, a lot of information to digest. Other things, the advanced chart, that's going a little more complex, too many technicals you have to keep track of. I would say find stocks that are within the S&P 500, that have a reputation for at least a few years, and you can start analyzing these stocks that way. But there's so many of them. So Amazon, you can buy shares. Let's see, 238, and Amazon right now has their market cap is 2.56 trillion with a PE of 33. Other ones, let's see, Walmart as an example. I have shares of pretty much all of them just because I like to stay safe. I do have about 70 shares in my account, so definitely not 70 shares, 7 different companies. And that is exactly what you're buying too. So think of these shares as like you are a part owner of a stock. You are supporting that stock. and you just got to make sure they're taking care of you as well. So PE for Walmart is 41. They do have a dividend of 0.79, and that's pretty much it. And once you decide you make up your mind about it, let's say this stock goes up over 1,000%, you can hit sell, sell all, or sell fractionally as well. You can do that. So sell here, you can sell $1 if you like, and that's how much you'll just get in your account. Another thing to consider is that if you do sell a stock and and you lost money as an example, make sure you wait those 30 days exactly after you sell before you can buy it back, because if you buy it before those 30 days, then you risk getting a wash sale rule applied to your account. So any loss that you made does not count, and you actually end up paying taxes on that money that you were supposed to lose, but you now, since you bought it back within 30 days, now you have to actually pay taxes on that. So be careful. I do recommend you look it up. It's the wash sale rule, and it's very important for taxes. So especially for day traders who think they can just buy something, sell it for a loss, and then buy it back next day, that will actually trigger that, and you won't be able to claim that loss. So be careful. Otherwise, any questions, concerns, comments, please leave them below and let me know how I can improve these videos. I do just enjoy making them. They are fun to make, but I do appreciate support if you do, and make sure you share it. Thank you, and I'll see you on the next one.